Okay, so welcome. It's time to get started, and as you can tell, everyone's been muted. If you have questions during the meeting, please use the chat function. I also want to remind you that there will be a drawing at the end of the meeting, one for a $50 gift card from KeyBank, after which two names will also be selected to receive 50% off local dues for 2021. However, you must register today at gpbr.com/win, information over there on your right, no later than 9:30 to be included in the drawing. I would now like to introduce your 2020 GPBR President, Jim Addison.
Someone needs to unmute. There we go. Well, listen, welcome everyone to our third general membership meeting of the Grosse Pointe Board in 2020. I'd like to start things off with the Pledge of Allegiance. I would like to just take a second to, state that the Pledge of Allegiance is a pledge to the ideals of which we can all agree on. And I'd also like to note that recently I realized that the Pledge of Allegiance, starts with I and ends with all. So let's all stand and pledge. I pledge allegiance to the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all. Okay, at this time, I'd like to recognize our corporate sponsors, and there they are up there. In particular, I would like to recognize our event sponsors, which are KeyBank, Churco Title, First American Home Warranty, Blessed Assurance Home Inspections. Again, thank you for your support. Without you, these meetings would not be possible. Before I have Bob introduce Colleen Barra from KeyBank, who is our primary sponsor for this meeting, again, I want to thank all of you for attending this third general membership meeting in 2020, and our second one done virtually. The first virtual one that we did in June had 134 people in attendance, and it looks like today we'll probably top that number. I would like to make one comment. In these unprecedented times, I want all of you to know that under the careful stewardship of the board of directors, Bob and his staff of Amy, Allison, and Julie, that in 2019, we had an $18,500 deficit in our budget. It looks like in 2020, even with the COVID, that we are going to have a healthy surplus by the time we close the books for 2020. Our membership numbers have remained strong, and therefore there will be no need to do a dues increase in 2021. Yay. Okay. On that note, I'm going to turn it back over to our EO, Bob Taylor.
Okay. Let's see, where are we? Jim, thank you very much for starting us off. And at this time, I would like to introduce Colleen Barra. Colleen, of course, is a Grosse Pointe native, but is also currently the National Sales Executive for KeyBank. KeyBank is our primary sponsor for today's meeting. Colleen?
Hey, thanks very much, Bob and everyone. Good morning. And again, as Bob indicated, we're very proud to be the sponsor of today's meeting. Just a couple things. I think in keeping with really, Bob, you've always said that one of the roles of the board is to add value to its members and its affiliates. And the time we'll spend today, and I have Dawn Lissigno as well as Chandra Fowler with me, is really just around hitting on some headlines of the industry many of you are very close to with respect to mortgage and real estate. And then just a 2021 outlook just based on the year we've had so far and how the industry is really viewing home lending and real estate going forward. So if you could advance the slide. So a couple things. Many of you were in the business back in 2003. It's hard to believe 17 years later, we're saying that this is pacing to be the biggest year in mortgage origination since that time. And obviously the key drivers in 2003, the economy was just getting out of a recession. And similar to what we're experiencing right now, that's one of the factors. We're seeing obviously exceptionally low interest rates. I know many of you are attending closings with your buyers and sellers and seeing even a 2 in front of the interest rate on 30-year fix and on ARMs. And so a gigantic mortgage market this year, both in refinance and obviously purchase demand. And I think some of the breakout sessions in advance of this meeting were speaking to that. And so 2020 mortgage originations are going to top over just 2.9 trillion. In 2003 was just over 3 trillion. So that kind of sizes how significant the home lending market is right now. The average 30-year mortgage rate is forecasted to remain in the low to mid 3s through 2021. So again, I think that bodes well for home affordability, and any of your clients who haven't taken advantage of refinancing obviously certainly should. And then home sales year over year are forecasted to increase over 18%. And again, this comes from Freddie Mac, and the MBA forecast is very similar. So again, a lot of optimism around home lending as well as the housing market. So I'm going to turn to the next slide and turn this over to Donald Signo just to talk a little bit about what we're seeing as a company and reference some of the statistics I think some of you were close to, especially around Realtor.com. So Don, I'll turn it over to you.
Yeah, good morning, everyone. I am Donald Signo. I'm the Midwest Specialty Lending Leader here at KeyBank. What we're seeing in the Midwest, I think, mirrors the National Association of Realtors. Many borrowers are getting pre-qualified. Like someone mentioned this morning, you know, more and more people are coming out and stepping up to home ownership. But inventory is tight. It's also often resulting in multiple offers. We're seeing jumps in sales prices. Sales of existing homes soared 24.7% in July. This was the strongest monthly gain in the history of the survey from the National Board of Realtors, which is really exciting news. Home buyer sentiment rose in August to the highest in a 35-year period as well. People want to buy bigger homes after being stuck inside during the pandemic. They want more space to work at home, more space for their kids for homeschooling. In this low rate environment, makes it the best time to buy a house. Chandra is going to talk to us a little bit about some of the changes that we have felt in 2020. So I'm going to turn it over to Chandra.
Thank you. Well, we're over halfway through 2020, and 2020 wouldn't be 2020 without changes, right? So we have seen some changes within the self-employed borrowers. We've seen a lot of changes within guidelines, more stricter underwriting. A little bit more education has been done up front and throughout the process with those types of borrowers to keep them on track to either refinance or purchase. We've also seen some changes, and I'm very thankful that KeyBank hasn't done this, but a lot of lenders have done away with their jumbo or their portfolio financing, which really has kind of put then the pressure on the buyers to find additional ways to get the purchase done if there's not a jumbo financing. As far as lenders also being prudent, there's been a decrease on loan to value guidelines. So for example, KeyBank has a physician loan that we were at 100% financing, and we've put it at 95% for right now due to COVID. But then again, too, there's been some lenders that have done away with the program entirely due to risk and heightened security around that part of it. Also, as far as some lenders and banks are looking at doing more for their clients and more with them. So they have done started with doing where they offer discounts for when they have their banking relationship with them. So that way that we can kind of grow with the client a little bit more. So for example, KeyBank started offering a quarter off the interest rate when the client is banking with us. Another change that we've had is the income analysis for underwriting. So that's being looked at a little bit more differently now. So if a borrower has commission or overtime or bonus income, we might not be able to use it. I mean, there's been some times that we have been, if it's something that they're receiving currently, but if it's something in the past that they have received and they're not currently receiving it due to COVID, we can't use that. So that can really hinder what they can purchase. So we're doing a lot of education on that to kind of get the borrower prepared and make sure that they're at the right price point. The availability of cash out refinances, this is another thing that I'm thankful for, but some lenders have done away with this. It's too risky. They have eliminated doing cash out refis. So that's been something else that's been to their surprise. There's also been a heightened interest around second home and investment purchases. We've definitely seen an uptick in second homes. So people are wanting to move to warmer states. They're preparing for winter. They're trying to be prepared if everybody goes on lockdown again. So that's great that still we're able to offer those types of financing programs. And then the last two things we've seen is the home improvement loans, that's also increased. So you have clients that are either preparing to sell and they want to fix up their home, or they're looking at fixing up their current home because they know that they're going to be stuck there. So that's also something that we've seen an increase in. And then the last thing that we've kind of had to kind of work through is borrowers requesting forbearance. So when COVID started, there was a lot of, I guess, talk about requesting forbearance, but the buyers weren't even educated, or the borrowers, about what would happen. So we've now had to try and help educate some of the borrowers that did request a forbearance, because number one, if they're in a forbearance and they're trying to do a refinance, they have to be out of that, or at least prove that they've made the payment even though they requested it. So it's going to hinder them on that part of it. Or if it's someone looking to be pre-approved and they're in a forbearance, that could also then have a negative impact. So it's kind of trying to help clients understand that before they picked up the phone to do that, they probably should have, asked someone and kind of been guided. So we've been doing a lot of talks around that as well.
Yeah, thanks, Chandra. And I think I heard multiple times you saying the words education and preparation, and I think that's one of the things so important. So much is different from early this year, January and February. The good news is when borrowers and buyers do seek out that education, they will find options. And we ourselves are having a record year in the business, we're pleased to say, in both purchase and refinance, and it looks like all the data points to that we're going to continue to see this type of volume in mortgage for some time. So finally, I'll end here with potential headwinds and issues facing the housing industry. And so sure, there's a lot of optimism, but here's some of the things that are under consideration. I think you're probably seeing this in your local markets in Southeast Michigan is housing inventory, supply of homes, and many people are staying put, as Chandra indicated. And so that's one of the things in terms of just available inventory. And on the buyer side, this is one thing that we're spending time on, is making certain clients get pre-qualified, fully prepared, and then also updating their documents along the way, because that's important if they're making multiple offers and not winning the bid, making certain that and advising clients, keep your pay stubs and your bank statements and all of your documentation handy, because you may in fact need to update it if you're not going to win the first couple bids on homes that you're putting on, or that you're bidding on. The adverse market fee on refinance mortgages, this will go into effect. FHA announced this a couple weeks back, and I think many of you probably saw this. It adds essentially 0.5% of the loan amount to the cost of doing a refinance. That has been delayed for implementation until December 1st. So if any of you are connecting with your past clients and they haven't refinanced to a rate in the 2s or the 3s, definitely is now the time to be able to do that. All things equal, it could be a little more expensive come December and into next year with respect to a refinance mortgage. And then the final two things, I think, labor market uncertainties. Obviously, there's been some positivities in terms of the number of jobless claims going down. Obviously, there's an employment report this coming Friday. So a lot of factors in terms of, I think all of you see with your clients, when people are confident in their income stream or they're confident in their jobs, have more of a likelihood to buy a home or buy up or buy that second home. And then finally, a big one, and I won't hypothesize here, the potential election considerations. And I think all of you have done probably doing enough reading of what the outcome could be and the impact obviously on the economy and housing market. So a bunch to consider there. So with that, I'll close was saying, if you could advance the slide, we're here to help. That's one of the things that we look at the rollers as a client as much as the borrowers as a client. And so we really have, although volumes are large across all lenders, we have a purchase first mentality when it comes to how we serve our clients, hitting closing dates and making certain that that's a priority in how we do business. So I'll close with just saying, and thanks Bob, and thanks everyone for the time. Glad to be a sponsor and appreciate it.
Well, Colleen, thank you very much. We really appreciate your team's message and certainly appreciate your being a sponsor with us today as well. By the way, let me just offer a quick reminder that registration for our drawings at the end of the meeting ends at 9:30. To be entered into those drawings, you need to go to gpbr.com/win. Next on today's agenda is Brad Ward, Vice President of Michigan Realtors Public Policy and Legal Affairs. Again, please use the chat functions for any questions you may have for Brad. Mr. Ward?
Thank you, Bob. Thank you very much to everyone for having me. Like all of you, getting used to Zoom meetings. If 2020 was a Zoom meeting, I'm sure we all would have had leave meeting by now. But things have not stopped in Lansing since the virus hit here and we were all ordered to stay at home. It just changed how we do things in government affairs and lobbying. So for all of you who don't know me, I'm your lobbyist in Lansing. This year has been very interesting in terms of trying to adapt on the fly, like most of you have in your business, and try to get things done in terms of preparing things for the future and trying to address needs and problems within the market right now. So, it's been a while since I've probably done one of these, or since you may have had a policy update. So I'm going to have to backtrack all the way back to March when the governor first issued her stay-at-home, the very first of 170 plus orders that she's issued since the beginning of March, in which we had the stay-at-home executive order that said that real estate was not an essential service and therefore was not allowed to operate face-to-face. This was a conversation that we actually started with the governor's office a couple weeks before she issued that executive order, trying to maintain why real estate was an important and essential function to the state of Michigan, why housing was important and essential to the state of Michigan, and started to lay that argument out because we saw that train coming down the track in other states and the way other states were approaching it. Unfortunately, we were not in that declaration of essential services. And to tell you the truth, very few industries actually were. Our governor was very much of the opinion and publicly stated that she wanted to take the most hard track against the virus that she could. Indeed, we were one of the most restrictive states in the nation over things that could and could not be done under our stay-at-home order. But we continued those conversations with the governor's office. We continued laying out the arguments, pulling from other states. This is how you can go back to work safely. This week, it sounds like kind of the last remaining industries, gyms, bowling alleys, movie theaters. It sounds like this afternoon's press conference very well may be the easing up of the restrictions on those folks. Not to say that they're going to go back to business as usual. Very few industries have actually gone back to business as usual, but restrictions easing on those. I could not imagine being that industry that's been out for 5 months. So fortunately, we in real estate were among the first wave of industries back to work in Michigan. We started in early May. But under, those restricted circumstances, there were issues with, making sure we maintained the public health, making sure that we protected ourselves. We made sure we protected our clients and the properties that we were reviewing. So I'm happy to say that we were back to work in that first wave. But in that, kind of month and a half that we had to work remotely, Michigan Realtors worked with the administration in terms of making sure that there were clarifications that even those deals that were already in the pipeline to go to closing could get to close. We made sure that there were clarifications over what people could do as far as remote showings. We saw a lot of ingenuity on behalf of our members in terms of how they were able to show and list properties, bring new clients on board. We also were able to pull forward with the work of a stakeholder group, pull forward our remote and electronic notary law in Michigan. That was something that had passed over a year ago, but it wasn't supposed to be fully implemented until May. And so we were able to pull forward that law to make sure that closings could still happen safely, where we kept people socially distanced, and that we were allowed to notarize documents at a distance or even through technology such as the one we're using right now. In addition, at the federal level, National Association of Realtors got to work on behalf of our members, making sure that we had independent contractor unemployment. That was the first time that independent contractors in the state of Michigan and all throughout the United States were able to collect unemployment. And then also through the Paycheck Protection Program, making sure that those businesses whose inventory and business were suffering was still able to keep the lights on, pay employees and things like that. So both of those deals at the federal level were extraordinarily important to keep real estate moving forward. The other thing that we saw is that because of the fact that everyone had to stay at home, dates had to be moving. Those traditional dates by which people pay their property taxes, both commercial and residential, the dates that people had to challenge the property tax assessment, all of those needed to move because we weren't able to access the services that we typically would. So we passed, with the work of the Michigan legislature, we passed a couple of bills, one extending the principal residence exemption filing deadline from June 1st to June 30th. So we gave an extra month for those buyers in the spring market to file their principal residence exemption so they can enjoy the lower tax rate on their July tax bill. If you have someone who was able to purchase a home, move into that home, and it is their principal residence. In other words, they met all the qualifications for PRE, and say maybe they didn't get the filing done before July 30th. As long as they met those criteria before July 30th, I encourage you to go back and work with the local assessor to get that property tax bill lowered, or if they've already paid their July property taxes, which they very well probably have, they may be able to get a refund on those for the amount over the principal residence exemption rate. But that PRE date did move to July 30 or to June 30th to make sure that buyers got extra time. In addition, one of the very early dates that we were bumping up against, especially for commercial property, was the fact that you had a deadline by which you needed to challenge your property tax assessments to the Michigan Tax Tribunal. That was first done through an executive order, and then we worked to have a bill introduced and extend that deadline to August 31st for all property. The executive order specifically dealt with commercial and industrial, but now residential and agricultural property, if you are looking to challenge those assessments and we were looking to take a challenge to the Michigan Tax Tribunal, you have until August 31st to do those. In addition, we had to work our way out of a foreclosure moratorium. You may have heard that the president announced I'm sorry, not a foreclosure moratorium, an eviction moratorium. We had to work our way out of an eviction moratorium. And you may have heard that President Trump yesterday announced that he was going to do a nationwide eviction moratorium. It's pretty early in the announcement. We're still trying to figure out exactly how that's going to impact nationwide. We here in Michigan, we're able to resume evictions July 16th, I believe, was the day we were allowed to resume evictions. But we had to work our way out of that. So we worked with the administration, we worked with MSHDA to take some of the CARES money. So there's $50 million in Michigan that's set aside where a landlord can get direct payments from MSHDA in order to keep someone in that property. So basically it helps the renter and it helps the landlord stay liquid. We understand that, look, when you're facing an eviction moratorium and you are a landlord and you own that property, you have bills that you have to pay. You have a mortgage that you have to pay, and I'm sure the folks at KeyBank love you paying your mortgage. So we wanted to make sure that that was possible. So MSHDA has a program that's up and running. If you are a landlord, I encourage you to take a look at it and work with MISTA and your tenant to hopefully, get yourselves back on an even footing here. In addition, we worked with folks at the Supreme Court in the court administrator's office to make sure we kind of outlined how those evictions should proceed, starting with people who were already in the eviction pipeline and then working your way down through the cases that would be filed in the court to make sure that you had a priority as far as people who, so you had the people who are already going to be evicted, then you had people who did damage or destruction or violated the lease in some way, shape, or form. Those were kind of the second. And then it went on how late you were in terms of your rental payments is kind of how the court is supposed to be addressing those right now. I know I've thrown a lot at you, but just bear with me because there's a lot still going on. We have an election coming up in November. After November election, we have what is known as lame duck. Lame duck means, especially in Michigan, that we have a number of representatives that will not be returning to the Michigan House of Representatives. So all 110 House seats are up. We have term limits here in Michigan, which means there's going to be about a third of those people who are not returning, and by our term limits, may never be able to return to the Michigan House. So this is a weird time where it's about a fast and furious month and a half, where November and December are everything that people couldn't get done. Maybe it was politically sensitive, maybe they can't come to an agreement, and they just try to flood it through at the end to see if it can pass. So lame duck's coming up, and we have a few bills that we're working to hopefully maneuver through lame duck. Nothing nefarious, I assure you. One of which is a COVID-19 liability. This is almost like a premises liability for employers. So our brokers out there, any affiliate members we have that run businesses, obviously businesses are just starting to try and get back on the feet, and the last thing they need is to be hit with a lawsuit for someone who contracted COVID-19 on their property. So the bill lays out that if you are doing the proper things, if you're following state law, if you're following the CDC guidelines, you are doing your best to protect the public and protect your employees or your agents, then you are insulated from that premises liability that would come up. Those bills received their first hearing in the House Judiciary Committee yesterday here in Lansing. And so we look forward to having further discussions and refinements of that bill as it moves through the process. Again, creating a safe harbor for those businesses that are doing the right thing in protecting public health and the health of their employees and agents. In addition, we have a bill that deals with home surveillance. This bill addresses some inequity in Michigan law where people are allowed to audio record their home for home surveillance purposes, but not necessarily allowed to video record. In today's day and age with things like Ring doorbell cameras, Arlos, and Alexas and other things, you use home surveillance whether you're intending to or not. You videotape people, and these come into play quite often when people are doing showings. We always tell people, hey, if you have a buyer, you're taking them through the house, and you want to have a conversation about that house, don't do it in the house, don't do it on the front porch, go down to the coffee shop or some other place to have that discussion, because sure enough, those things turn on without a mind of their own, and they could listen in on, this is what I like about the house, this is what I hate about the house. I had one agent tell me that they got a call from the seller's broker and said, yeah, we knew you guys were going to put an offer in our house because we saw your buyer dancing in the kitchen. So you are always being watched. Alexa is always listening. And this law is to make sure that your seller clients who do have these items in their home aren't either intentionally or inadvertently violating Michigan law by video recording their home, so for home surveillance purposes. So it would make sure that people are allowed to do that to make sure that their property and their home are safe. In addition, we also have a bill that deals with appraisers. Appraisal management companies are regulated in the state of Michigan. We are updating that law to mirror federal guidelines. But one of the additional things that Michigan Realtors was able to put in there for our appraiser members is a requirement that the AMC be timely with those payments and pay you within 30 days. We know that most are very good AMCs, but there are some bad actors out there who may go beyond that 30-day model. So that is going into the bill. It's currently at 60 days. It's moving it down to 30 days. We also have 2 bills up in committee today, a bill dealing with marketable title. I'm not going to bore you with the details or a property law 101 lecture on what marketable title means, but there was a bill that passed a couple of years ago that has opened up the Marketable Title Act that deals with deed restrictions that had some unintended consequences of both residential and commercial real estate, and we're trying to kind of put that genie back into the bottle, put the worms back into the can, if you will, on the Marketable Title Act. So we've been working with the real property law section on a solution there. That bill is going to receive a hearing today in the House Ways and Means Committee. Additionally, in the House Ways and Means Committee is a bill that deals with all licensing, not just real estate licensing, but good moral character. And we have an amendment that's going into that bill to make sure that our BREBS board can still operate status quo. Nothing changes necessarily for the Board of Real Estate Brokers and Salesperson when looking at the good moral character of a real estate licensee. The bill is really kind of intended to set up a bright line test for whether or not an individual should get a license. Our argument has been our license is a little bit more unique in which looking at the totality of the circumstances surrounding a crime can either be can be determinative of that person's good moral character, in as much as that our license allows you to go into someone else's home when they aren't there. Our license gives you access to financial information about an individual. It gives you access to their social security numbers and things like that. So we feel like that extra level of scrutiny is warranted in the case of real estate licensing, rather than just a bright line test where if you can if you pass the legislature's test, you get a license. So trying to make sure that our Board of Real Estate Brokers and Salespersons can maintain that status quo. So I know that's a lot, and I'm bumping up against my time limit, but I'm happy to take questions if there are any that are out there.
Brad, thank you. Yes, we've had some questions already. The first one came in from Ron Bomarito at Weatherstone Property Inspection. Some brokers have mentioned that potential licensees are not able to take licensing tests. What is being done to rectify this, and what is the current timeline for testing opportunities?
Yeah, oh, great question. So all of the testing centers are open now. We've been working with the department. All of the testing centers are open, but testing centers under the governor's orders still have to abide by the social distancing requirements and the public gathering requirements. So they're not able to host as many students as they usually do, but you schedule those examinations the same way you have in the past through the PSI link on the department's website. Our understanding was they were booking about a month out. But all of the testing centers in Michigan are reopened. The other thing that Ron might be asking about is the state of Michigan went through a database change for real estate. They're doing this for all industries. The state database was over 20 years old. So you can only imagine if you think about the computer you owned 20 years ago, how this state database was functioning. So they're actually updating the database and they're moving them over license by license. So our license switchover meant that they weren't processing any new licenses, either brokers or salespersons, for about a month. But as of last week, that changeover to the new database has been completed, and you should be starting to, if you've put in an application for licensure with the department, they should be starting to process those and deliver those this week. So they weren't able to issue any licenses or really take any additional applications. They were accepting applications, but they weren't able to process licenses during that month. But we're through that month, and so now it's just everything that's on the desk is getting processed first. We're hoping that we're working with the governor's office on hopefully clarifying an executive order that would open up a little bit more space in those testing centers if allowable, and also for local associations that hold continuing education. We're trying to make sure that we can do those types of things safely and beyond, the 10 people requirement.
Thank you, Brad. We had another question come in from Andrea Warnick. With the MI Plus new account, is there a time frame for brokerages to receive our PIN information to set up brokerage accounts?
We are, again, we've been in constant communication with the department since last week. Those should be coming. And so I apologize that you don't have those yet, but we work with the department and we're trying to get them to process these things faster. But those should be on their way in short order. That's a great question.
Very good, thank you. Changing gears, a question from Anne Marie DeRozier. Any thought to coverage regarding COVID lawsuits for agents, not just brokers?
This would this would include agents as well, because they are included under the definition of what that person is. So yes, this should include agents as well. But as long as you are following those guidelines that have been laid out by the state, and then also CDC guidelines as far as social distancing and things like that. Again, this bill is still kind of in the early stages, and we're hoping for a signature, but right now the administration is kind of pushing back a little bit. So we're hoping to get everyone on board in a workable fashion.
Very good. We've got one final question. I've heard about a court ruling for tax foreclosures in local governments that will likely impact homeownership rights. What is that about?
Oh, yes. So this was the Rafali case. The Rafali case was a case where an individual sued Oakland County over proceeds for a tax foreclosure sale. So the facts of the case were the fact that about $8, I think, was at issue. And then with late fees and things like that, it added up to a couple $100. Oakland County foreclosed on the couple $100 in back taxes that were owed, sold the property for about $20,000 and kept the rest under state law. That's the way our tax foreclosure law has operated since the 90s when they changed it, is that the local government was entitled to those proceeds. This case made it all the way up to the Michigan Supreme Court. The Michigan Supreme Court a couple of weeks ago ruled unanimously that is actually a violation, is a taking without just compensation if you were to keep the proceeds of those foreclosure sales. So this is actually going to have a pretty significant impact on tax foreclosures in the state of Michigan, as well as funding for a lot of our counties who are usually the tax foreclosing entities, because they've typically been entitled to the proceeds of those. But under the Supreme Court ruling, remanding it back to the Court of Appeals to come up with a remedy, this looks like homeowners are going to be due refunds on those tax foreclosure sales where the amount of the sale was above the amount owed in back taxes and penalties. So this could have some far-reaching budgetary implications for counties, but it's definitely also a win for private property rights. And so the legislature has already introduced a handful of bills to try to codify this provision into Michigan law. So we'll keep you updated as those move forward. But it's definitely a case, and it's very rare that we see unanimous opinions sometimes from the Michigan Supreme Court. But in this instance, they all felt very clearly that they even cited the Magna Carta in their ruling. So like, even since the Magna Carta, you had to make sure that if you were going to take someone's property, that they were justly compensated. So.
Brad, thank you very much. I know our members really appreciate your taking the time to join us this morning. That was a lot to digest. Next is a brief message from Peter Churko of Churko Title. Peter is the marketing manager for the company.
I'm Peter Churko. First, I'd like to thank the board for giving us the opportunity to speak today. Churko Title has been servicing the Grosse Pointe and Macomb communities for over 33 years. We're conveniently located in St. Clair Shores, but can conduct closings anywhere you'd like. Since the COVID pandemic, we have had to make some changes to ensure the safety of you, your clients, and our staff. We're conducting temperature checks for anyone who enters our building. We're sanitizing our closing rooms after every signing, and we're even offering curbside closings for those that feel a little uncomfortable entering an office building. We're happy to do anything we can to make you and your clients feel comfortable and have a great closing experience no matter what's going on in the world around us. We'd love the opportunity to assist you and your clients. If you need anything, please reach out to me. Thank you again.
Helps if I unmute myself. Peter, thank you. That was very entertaining. At this point, I would like to ask you to pay attention to this presentation by the Grosse Pointe Board of Realtors Fair Housing and Diversity Committee.
Hi, I'm Charles Krasner, Chair of the Fair Housing and Diversity Committee. Please join me in welcoming Steve Tomkowiak, the Executive Director of the Fair Housing Center of Metro Detroit. Thank you for joining us today. I'm here to introduce the following presentation created by our committee, spliced together from the works of a number of great resources, some of which you may be familiar with. Our goal is to provide you with useful information to help you navigate the many issues realtors may encounter related to fair housing and to inspire you to take action. We are proud of our commitment to fair housing and invite everyone to join us in that commitment today and every day by being all in for fair housing and diversity. Thank you.
We need to talk about race. Why are people protesting? Why are people angry? Slavery ended 150 years ago. The civil rights movement was 60 years ago. Racial discrimination is illegal now. Heck, we even had a black president. So why are people still upset? These are two households in America. One is black, the other is white. Today, the average black household has 60% of the income of the average white household, but only 1/10 of the household wealth. Why does that matter? Well, household wealth helps send kids to school, helps launch small businesses, stabilizes loss of income, and helps families survive catastrophic events like divorce or unemployment. What's amazing about this number is that there are lots of extremely wealthy African Americans, movie stars, pop stars, 75% of the NBA, 70% of the NFL, Oprah, Tyler Perry, Ben Carson, Morgan Freeman, and there are a lot of extremely poor white families. Think of Appalachia and other parts of rural America. But even when we factor all that in, the average black household still has only 1/10 the wealth of the average white household. How did that happen? Well, here we go. What happened after we freed the slaves, after the Civil War ended? 9 states enacted vagrancy laws, making it a crime to not have a job. The law was applied only to black men. 8 of those states then allowed prisoners, the black men who'd just been arrested for not having a job, to be hired out to plantation owners with little or no pay going to the prisoners themselves. So, that's right, men who had been freed from the plantations found themselves right back on the plantations. Additional laws prohibited mischief and insulting gestures, which allowed more black men to be arrested and created a huge market for convict leasing. Working conditions for these leased convicts could be worse than slavery because the plantation owner leasing the black prisoner had no long-term interest in his well-being. At the turn of the 20th century, every state in the South had mandated racial segregation by law, Jim Crow laws, which supported a social ostracism for blacks that extended to schools, churches, housing, jobs, restrooms, hotels and restaurants, hospitals, prisons, funeral homes, morgues, and cemeteries. primaries. White politicians competed with each other to be more strict and specific on segregation. For example, a law prohibiting blacks and whites from playing chess together. No interracial chess playing. That might lead to lawn darts. In 1896, the Supreme Court ruled that these Jim Crow laws were perfectly legal because they, quote, reflected customs and traditions and, quote, preserved public peace and good order. These laws stayed in place until 1954, when the idea of separate but equal was struck down in the ruling known as Brown versus Board of Education. So what happened next after Brown? Well, in 1956, the Southern Manifesto was signed by 101 out of 128 Congress members from the South, pledging to maintain Jim Crow by all means possible. 5 states passed nearly 50 new Jim Crow laws after 1954. Private whites-only schools, dubbed segregation academies, popped up all across the South, many of them Christian. But now widespread civil rights protests, combined with anti-war protests that were occasionally becoming violent, inspired the political rise of law and order rhetoric. Richard Nixon became the first candidate to campaign specifically on a platform of law and order. In 1968, 81% of Americans agreed that law and order had broken down in this country, and the majority blamed communists and Negroes who start riots. Let's go back to household wealth. The average black household has 1/10 the wealth of the average white household. Why is that? Because the #1 source of intergenerational wealth in America is home ownership. And from the 1930s to well into the 1960s, the federal government enacted policies to actively encourage white families to own homes and discourage black families from doing the same.
The Federal Housing Administration and the Veterans Administration developed a program to guarantee loans for working-class families to purchase homes. But there was a catch. Those loans were not available to people of color. If you were Black, Latinx, Hispanic, Asian, the guarantees for loans weren't available at all. And if you were a white family and you were interested in moving into an integrated neighborhood, those loans weren't available to you either.
In 1934, the Federal Housing Administration created a risk rating system to determine which neighborhoods were safe investment for federally backed mortgages. Black neighborhoods were deemed too risky, marked off in maps with red ink, in a practice now known as redlining. After World War II, a boom of new suburban housing was built all over the country, much of it restricted by deed to whites only. In 1948, 40% of new housing developments in Minneapolis, for example, had covenants prohibiting purchase by African Americans. So blacks couldn't live in white neighborhoods and couldn't get federally insured loans for black neighborhoods. Until 1950, the Realtor's Code of Ethics specifically prohibited selling a house in a white neighborhood to a non-white family. You could lose your realtor's license if you helped a black family buy a home in a white neighborhood. In the 1930s, the FHA's underwriting manual said, quote, incompatible racial groups should not be permitted to live in the same communities. The FHA went on to recommend that highways would be a great way to separate black neighborhoods from white neighborhoods. The FHA funded huge white-only suburban housing developments, leaving blacks behind in inner cities. After World War II, the GI Bill provided subsidized mortgages to help millions of men returning from war to buy their first home. While technically eligible for the GI Bill, the way it was administered left 1 million black veterans largely on the outside looking in. In New York and New Jersey, the GI Bill insured more than 67,000 new mortgages. Fewer than 100 of those went for homes purchased by non-whites. In 1947, there were 3,200 mortgages in Mississippi guaranteed by the government for returning veterans. Of the 3,200, only 2 went to black veterans. As a result, white families after the war were able to build home equity, growing wealth for retirement, inheritance, and college education for their kids. One historian has stated that there was no greater instrument for widening an already huge racial gap in post-war America than the GI Bill.
So the government had a great deal to do with hardening segregation. But as many of you know, the real estate industry itself also played a role.
The practice of blockbusting, the process by which real estate brokers convinced white homeowners to sell their properties at below market rates due to fears of racial change in their neighborhoods. Brokers then made profits by reselling the same home at higher prices to customers who were not white. Tactics included door-to-door and telephone solicitations, the dissemination of leaflets saying minorities had purchased property nearby, that schools were going to change and that effective policing was no longer possible, phone calls in which a caller would apologize for a misdial and then indicate he was trying to reach the Black family who had just moved in, and obtaining numerous listings and then using for sale signs to indicate that a neighborhood was changing. A 1971 Chicago Tribune article featured anecdotes from brokers who engaged in the following tactics. Quote, "We don't care if the whites run all the way to Hong Kong, as long as they run. I go where the money is. It's good for business when they're frightened." Quote, "Chicago Avenue is the demarcation line right now, but one of these days, some Black will move north of Chicago Avenue. When one of them jumps, that's the green light. Then it's open season."
Our local history is ripe with examples of discriminatory practices and racism. 1943, deep social unrest from the poor living conditions, inequalities, and racism made more apparent by the prosperity that came from the arsenal of democracy known as Detroit erupted in the summer in a brutal clash. In the 1940s, particularly as soldiers returned from fighting abroad, many sought to distance themselves from the social unrest and urban setting of the big city. This started what is referred to as white flight. In 1945, the Grosse Pointe Broker Association established the first version of the point system, developed as a questionnaire to be given to all prospective new residents of the Grosse Pointe community. It prevented many from buying homes in the area, including Italians, Jews, and any person of color. In 1967, social unrest again erupted in the well-known Detroit riots. Following the Detroit riots, a huge wave of white flight occurred, with the largest being 80,000 people moving from Detroit in 1968. Still in that year, partially in response to the mass exodus of Detroit, the state of Michigan signed into law the Michigan Fair Housing Act. Meanwhile, on a national level, President Lyndon B. Johnson signed into law the Civil Rights Act of 1968, also known as the Fair Housing Act. Also in 1968, the Grosse Pointe Brokers Association was forced to end the discriminatory practice known as the point system due to a court case after 23 years of use. In 1976, the Elliott Larson Civil Rights Act was signed into law, expanding on the protections given and strengthening the Michigan Civil Rights Commission. Understanding the past helps to inform our future. Discrimination, racism, and implicit bias are still occurring today, which makes fair housing relevant and important to all realtors, even in the 21st century.
But why are we still separated by race, by ethnicity? Why are our neighborhoods still so homogeneous? Why, if we have children, do they go to school with kids who look mostly like them? Was this the whole point, the Fair Housing Act of 1968? What's getting in the way?
This is Jamal. Jamal is a boy who lives in a poor neighborhood. He has a friend named Kevin, who lives in a wealthy neighborhood. All of Jamal's neighbors are African American, and all of Kevin's neighbors are white. Because Jamal's school district is mostly funded by property taxes, his school is not very well funded. His classrooms are overcrowded, his teachers are underpaid, and he doesn't have access to high-quality tutors or extracurricular activities. Kevin's school district is also funded by property taxes, so his school is very well funded. His classrooms are never crowded, his teachers are very well paid, and he has access to high-quality tutors and lots of extracurricular activities. Kevin and Jamal live only a few streets away from each other. So how come they're growing up in such different worlds with such different opportunities for success? The answer has to do with America's history of systemic racism. To understand it better, let's look at what life was like for Kevin and Jamal's grandparents. Decades after the Civil War, many government agencies started to draw maps dividing cities into sections that were either desirable or undesirable for investment. This practice was called redlining, and it usually blocked off entire black neighborhoods from access to private and public investment. Banks and insurance companies used these maps for decades to deny black people loans and other services based purely on race. Historically speaking, Owning a home and getting a college education is the easiest way for an American family to build wealth. But when Jamal's grandparents wanted to buy a house, the banks refused because they lived in a neighborhood that was redlined. So Jamal's grandparents were not able to buy a home, and because colleges could prevent them from attending through legal segregation, their options for higher education were really scarce. Kevin's grandparents, on the other hand, got a low-interest loan to buy their first house and got accepted into a handful of top universities, which traditionally only accepted white students. This opened up a wealth of opportunities that they were able to pass on to their kids and grandkids. Even as late as the 1980s, an investigation into the Atlanta real estate market showed that banks were more willing to lend to low-income white families than to middle or upper-income African-American families. As a result, today, for every $100 of wealth held by a white family, black families have $5.04. A 2017 study confirms that redlining is still affecting home values in major cities like Chicago today. This explains how Kevin and Jamal inherited vastly different circumstances. Unfortunately, the story doesn't end there. A big part of systemic racism is implicit bias. These are prejudices in society that people are not aware that they have. Let's go back to Kevin and Jamal. Against all odds, Jamal manages to be the only student from his high school to get accepted into a great university, the same one that Kevin and his high school friends are attending. But after Kevin and Jamal both graduate, Jamal notices that his resume isn't drawing as much interest as Kevin's, even though they graduated from the same program with the exact same GPA. Unfortunately for Jamal, studies show that resumes with white-sounding names get twice as many callbacks as identical resumes with black-sounding names. Implicit bias is one of the reasons why the black unemployment rate is twice the rate of white unemployment, even among college graduates today. You can see evidence of systemic racism in every area of life. The disparities in family wealth, incarceration rates, political representation, and education are all examples of systemic racism. Unfortunately, the biggest challenge with systemic racism is that there's no single person or entity responsible for it, which makes it very hard to solve. So what can you do? The first thing you can do is work towards becoming more aware of your own implicit biases. What are some prejudices that you might hold that you're not aware of? Second, let's acknowledge that the consequences of slavery and Jim Crow laws are still affecting access to opportunity today. As a result, we should support systemic changes that create more equal opportunities for everyone. Increasing public school funding and making it independent from property taxes would be a great start, so that poor and wealthy districts can receive equal access to resources. Systemic problems require systemic solutions. Luckily, we're all part of the system, which means that we all have a role to play in making it better. Peace.
What is bias? This brings us to the concept of bias. A bias is a preference for or an aversion against a group of people. And preferences for a particular group can be as powerful because accumulated advantage over time has an enormous effect. Implicit bias refers to the brain's automatic association of stereotypes and attitudes toward particular groups, often without our conscious awareness. We use the phrase implicit rather than unconscious because even when we're conscious of these biases, they still emerge automatically, instantly in our brains. And that's why they're so powerful. Implicit bias. Having an implicit bias doesn't mean we have to act on it. Every human being has implicit biases toward a range of groups, and implicit biases exist toward all the different identities we have, because of course none of us consist of a single identity. So implicit biases exist according to race and ethnicity, which is what we've been talking about, but also gender, sexual orientation, age, ability status, religion. And as you can see, many of these are the exact categories the Fair Housing Act covers. And that's part of the reason why we have to be mindful that how we think we're behaving might not be how we're actually behaving. Our decisions might be being guided by these associations we have in our brains that are, again, inconsistent with our values as humans.
So where are we? The average black household has 1/10 the wealth of the average white household. This didn't happen by accident. It happened by policy. We, the majority culture, told them where they could live and where they couldn't. Then we moved most of the jobs to the places we told them they couldn't live. When the predictable explosion of unemployment and poverty resulted in a predictable increase in drug use and crime, we criminalized the problem. We built $19 billion of new jails and sold grenade launchers to the police. As a result, a white boy born in America today has a 1 in 23 chance of going to prison in his lifetime. For a black boy, it's 1 in 4. And that is why people are angry. What am I asking you to do? Care.
Good morning. This is Bobby D. Lewis, and on behalf of all members of the Grosse Pointe Board of Realtors Fair Housing and Diversity Committee, thank you for joining us. We ask that you think about what you have seen and the information that we have shared with you today. Our goal was not only to provide you with useful information that will help your business navigate the many issues that we, as realtors, may encounter related to fair housing, but also to inspire you to take action. Here are just a few suggestions. Make fair housing discussions a part of your regular agent broker meetings. Encourage frank, open discussion about fair housing so that agents and others are comfortable raising concerns or issues that they will encounter in the marketplace. Set a goal or plan to expand your customer base to consciously seek out and farm for a diverse population of buyers and sellers. And remember, if you have a question related to fair housing, please contact the Fair Housing Center of Metro Detroit at 313-963-1274. That number again, Fair Housing Center of Metro Detroit, 313-963-1274. Thank you.
Thank you, Fair Housing and Diversity Committee. That was very insightful. Now, please pay attention to this message from another of our meeting sponsors, Kim Romero of First American Home Warranty. Kim?
It's Kim with First American Home Warranty. How you doing? Hey, Kim with First American Home Warranty. So I have a couple questions for you. Do you know First American Home Warranty? When is the last time you compared home warranties? So I have a question, and this is it. Does your business look like this? It's healthy, it's growing, working hard. But do you want it to look like this? I can help you get there. My goal is to bring value to your business and create referrals for you, okay? So First American Home Warranty, we cover all your home systems, and appliances, your critical home systems, and we cover failures. So I don't know if you realize this, if you haven't compared lately, First American Home Warranty has no age limit on any home system or appliance. Coverage starts immediately for the seller up to 180 days, converts for 1 year on the day of closing for the buyer. We don't have a dollar limit for the buyer on their HVAC or AC system, forced air and AC system. We also cover all costs of refrigerant, which is including R22. Are you familiar with what's going on with that? R22 is banned in the United States right now. 2020, it's been our funky year of all these nuances going on. Well, R22 is one of them, actually, to protect the ozone. So the EPA has put a ban on R22 refrigerant, which is any of the, probably the Freon going down on any AC lines starting 2012 and older. We don't have an age restriction on any home system or appliance, and we cover all costs of refrigerant, including R22. So, okay, so that's just a couple things, and I could go on and on. I have a claims partner, you know, that has a direct line. People aren't on hold for the 800 phone number. I have a claims partner who is awesome. Our processes are easy, we're affordable, easy, and we try to make your life better and bring value to you and your clients. So reach out to me. I'd love to get to know you if we don't already know each other. And most importantly, I'd like to thank the Grosse Pointe Board of Realtors for allowing me to sponsor today. I'm a proud member, and I appreciate everybody's dedication and hard work and commitment to the real estate community. Thanks so much. Stay safe and be well. Enjoy today's class. Thank you so much. Bye-bye.
Helps if I unmute myself. Thank you, Kim. At this time, we're going to hear from our 2019 Realtor of the Year, David Claff. David will be announcing our 2020 Realtor of the Year.
Good morning, Grosse Pointe members. Today, I get the honor to introduce this year's Grosse Pointe Board Realtor of the Year. This person is, or has been, WCR President, a member of the Grosse Pointe Board of Directors, one of the principal organizers behind the formation of the Macomb County chapter, a member of the Michigan Realtor Fair Housing Committee, a member of the Grosse Pointe RPAC Committee, a trainer, a mentor, and instructor, a bit of a tech whiz, an RPAC major investor, always willing to stop whatever they're doing to help others, involved with the Sterling Heights Chamber of Commerce and Industry as one of their committee chairs. This person also participates in the state and national realtor meetings. If you haven't guessed by now, this year's Grosse Pointe Board Realtor of the Year is Chris Van Bell. Congratulations, Chris.
All right, so I want to get everybody together because I have an announcement to make. Chris Van Bell, our Realtor of the Year for 2020.
Oh my gosh.
You're a special. You're awesome, Chris.
Congratulations. It's all because of the great people we have around us, you know, whether it's our board or our offices or anywhere, man. Thank you so much.
So congratulations, Chris. That video, by the way, was shot about a week ago. Michigan Realtors notifies its recipients, or the local recipients, well before our meeting today, and we wanted to capture that look of surprise on his face for you all to see. I'd like to now turn the mic over to President Jim.
Thanks, Bob. I appreciate that. You know, this is the time we're going to update our upcoming elections. To do that, I'd like to introduce Kevin Brennan, who will announce the current slate of those seeking to serve on your 2021 Board of Directors. So, Kevin, take it away.
Good morning, everybody. This year, 5 people are seeking to fill one of 3 seats on the 2021 Board of Directors. They are Pat Derry, Kelly Dix, Kathy Furlong, Charles Krasner, and Chris Van Bell. Running for affiliate director is Krista Rozier. Also, for the Board of Directors, Chase Wakefield and Tamara Smith are seeking election to fill 2 seats on the board representing the Harper Woods Grosse Pointe chapter, and Kim Dries is seeking election to the Board of Directors to fill 1 seat representing the Macomb chapter. There are also regional elections about to take place for both our Harper Woods Grosse Pointe chapter and our Macomb chapter. Look for more information via email soon. Once the time allocated for the petition process concludes, the final ballot will be prepared and sent for your electronic vote. Thanks so much. Enjoy the rest of the meeting.
Thank you, Kevin, for that update. Now, a few words from Cindy Werbrook of Blessed Assurance Home Inspection, another of our sponsors today.
Good morning, Grosse Pointe Board of Realtor members. My name is Cindy, and I am your sponsor today. We are with Blessed Assurance Home Inspection, and we are a Southeast Michigan-based company with an A+ Better Business rating. We provide about $100,000 worth of coverage with our home inspection. That includes some coverage for mold, sewer, structural. We also monitor all of the appliances indefinitely for any potential recalls. And we also provide a 5-year roof leak protection program. We can offer a police, fire, and military discount, and you can schedule on our website or by calling us on our scheduling line 24/7. Someone will answer the phone regardless of the time. It would be our honor to help your clients with their home inspection. We have specialty equipment that we can use, including sewer scopes and crawl bots. We have a drone, and we also have wireless radon equipment. Give us a call and we can set up a coffee or a Zoom call, and I can tell you a little bit more about the coverages that we provide and answer any questions that you have. Again, Cindy from Blessed Assurance Home Inspection, and enjoy the video will follow.
At Blessed Assurance Home Inspections, you get way more than just a home inspection. Our 90-day warranty offers structural and mechanical coverage. Recall Check notifies you of recalled appliances in your home and arranges repairs at no cost to you. Sewer Guard covers water and sewer lines that lay underground. Mold Safe covers your home against any new issues of visible mold. Platinum Roof Protection Plan covers your roof against potential future leaks for 5 years. Radon Protection Plan covers the cost of installing radon mitigation systems. Next Structural Warranty offers $100,000 in total protection.
When you need a home inspection, choose Blessed Assurance for amazing service and free protection plans included to ensure your transaction will go smoothly. Give us a call or book online today.
Thank you, Cindy, and thank you, Blessed Assurance Home Inspection. Hopefully, none of you have forgotten about our support for Guardian Angels medical service dogs. Here are Suzanne Gall and Ron Bomarito of our Community Outreach Committee to talk about Harper, our next dog named after the city of Harper Woods.
Good morning. My name is Suzanne Gall, and I'm the chair for your Community Outreach Committee. I'm excited to announce our fundraising campaign for Harper, the current sponsored dog through the Guardian Angels Medical Service Dogs. Here to tell you more is committee member Ron Bomarito.
Thank you, Suzanne, and all members of the Grosse Pointe Board of Realtors. Guardian Angel Medical Service Dogs provide highly trained dogs for veterans and first responders. These incredible animals restore freedom and independence to their recipients by combating the effects of PTSD, seizure, diabetic disorders, mobility issues, and more. We need $25,000 for our dog, your dog, Harper. Now the good news, you're already more than halfway there. The campaign goal is $11,100, begins today, and runs through November 3rd. We hope to announce at our general membership meeting on November 4th that Harper is fully funded. With your help, we will. Please donate online at gpbr.com or contact the office. Harper will be the 4th dog you have provided for grateful veterans. You can help change another life in a very meaningful way. Thank you.
Suzanne and Ron, thank you very much. I know you have a lot of hard work ahead of you, so I want to encourage our members to be responsive to your efforts. If we do, we will meet our goal to fully fund Harper by the time of our annual meeting. Now, our President-elect, Alexis DeLuca, has some final announcements for us.
Thank you. Thank you for attending our second virtual general membership meeting. On behalf of our leadership team, I would like to extend a huge thanks to today's presenters and sponsors. Please mark your calendar and register in advance for the following upcoming events and classes. Red Wine and Regulations affiliate update and virtual happy hour tomorrow, September 3rd at 4 p.m. via Zoom. Morning Pop-In Mixer on September 10th at 8:30 a.m. at Sweetwater's Coffee and Tea in Clinton Township, hosted by our Macomb County chapter. All members are welcome. Monthly Roundtable Luncheon on Friday, September 18th at 12 noon via Zoom. Virtual Success Series class on home inspection, focusing on well and septic rules, Monday, September 21st at 1 p.m. An in-person GRI 2 course with a location to be determined will be on September 21st at www.gpbr.com for details, and remember that the GRI series can be taken in any order. 3 virtual annual meetings at which our 2021 election results will be announced. Harper Woods Grosse Pointe chapter on October 13th at 9 a.m., Macomb chapter on October 15th at 9 a.m., and the GPBR annual meeting on November 4th at 9 a.m. As always, remember to visit our website and check your weekly news you can use for more networking and professional development opportunities. Once again, thanks to today's generous sponsors, presenters, and to all of you for attending.
Alexis, thank you very much. I know you're all waiting for the drawings to see who wins our $50 gift card from KeyBank and who will receive 50% off 2021 local dues, but before we do, I do need to make some final remarks. First, I want to thank Brad Ward of Michigan Realtors for joining us today. Next, Con Ed classes with Jack Waller begin September 26th. They will, of course, be virtual. Also, speaking of networking, we will be keeping the meeting open until 10:30 for those who would like to chat. Now let's spin that wheel. Kelly is the winner of the $50 gift card from KeyBank. Congratulations. Half off 2021 local dues, Colleen O'Bide. Chuck Maniachi, half off 2021 local dues. Congratulations to Chuck and to all of our other winners. That's it for today. Again, open until 10:30 for those who want to chat. Thanks for joining us.